Today is the third week of February 2021. Let's check my current account balance. This is my TD Ameritrade account. The current account value is 510,000. In August 2020, I transferred some stocks from another broker, so that's why it jumped here. I also transferred stocks from another broker in January 2021. You can see my current balance. Let's check my cost basis. My year-to-date gain from January to February 21st, 18,000 here, realized gain. I also have unrealized gain. The long positions are stocks I long or the options I long, such as buying calls or buying puts. The short positions include directly shorting stocks or selling options, such as selling covered calls or selling naked puts. If you combine them, my unrealized gain is about 110,000. This is my TD Ameritrade portfolio. You can see my net liquidation value here, 510,000. Let's see my positions here. I have positions in ARKK. QTY means quantity, the number of shares I'm holding. Net LIC means the net value of the stocks. So that's 100 shares, 15,000. You can see my trade price here. The trade price is the price that I opened this option. So I sold it for $3.50, and now the current value, the mark price is the current value of the option. I have gained some time value of this option. I'm also holding QQQ. I have 300 shares. The net value is about 100,000. One contract of options is for 100 shares. If we combine these two rows, -2 plus -1, these three contracts are for the QQQ 300 shares. I also sell 2 naked calls and 1 naked put. So the reason I sell naked call is that I have some other stocks, such as Apple, Amazon, Facebook, Google, Microsoft, QQQJ. You can see the value here, 60,000. As the current price of QQQ is 330, 200 shares is almost the same as 60,000. When we sell calls, we don't have to sell the real covered calls. We can sell the QQQ call, but we are owning other stocks. The reason I sell QQQ call is that QQQJ's options are very illiquid. If you check QQQ calls here, you can see that the bid and ask spread, the difference between bid price and ask price, is not so big. It's just 7 cents compared with $6. So 7 cents divided by $6 is like 1.2%. But for QQQJ, if you sell the option at the bid price and buy the option at the ask price, then you have already lost 5 cents, 10% of the option value. 5 divided by 40, that is more than 10%. That's why I do not like to sell QQQJ options. It is very illiquid. To find the correlation between two stocks, we can put them here, QQQ and QQQJ. This is the daily correlation. you can see that they are highly correlated. If the value is 1, the value here is 1, it means that they go up and go down at the same time. Let's go back to my portfolio. And I'm still holding Alibaba stocks. You can see the covered call now is 45 days. I have rolled the covered call from 1 month to 2 months away. I will explain more details about how to roll options in the later videos. I also have KWEB naked puts. 89 days until expiration. I'm shorting UNG. UNG is the natural gas ETF. You can see that I sell calls here. Selling calls means that I have bearish bias on this stock. I earn money when natural gas goes down, but I lose money when natural gas goes up. If we add the quantity of the options, 17 plus 9 plus 1 plus 1 plus 9, that is 37 contracts. I short 37 contracts. I also buy 37 higher strike calls. The 17 strike price calls are for the protection of my short calls. We can analyze my risk profile of UNG here. The horizontal axis is the price of UNG. The vertical axis is the profit or loss. If UNG drops to $6, then I have a maximum gain 5,000. If UNG goes up to $20 or even $30, I will have a maximum loss. If I put a cursor here, you can see the maximum loss is about 22,000. So this is very important. It's better that you have a protection, the long call. I also have a hedge position, UNL, 12 months natural gas ETF. UNL and UNG are highly correlated, meaning that if UNG goes up, UNL will also go up. You can see the plus sign here. Plus sign means a long. I long 1,600 shares of UNL. If natural gas goes up, I will have a loss in UNG, but I will have a gain in UNL. So in this case, at least UNL can reduce my loss. I also rolled USO options to 100 days until expiration. The reason is that the cover calls are deep in the money. I do not expect I can make a lot of money on this position. This position is like a cash position, but I can still earn about 5% each year. I can sell the 300 USO shares and close the covered calls. Then I can get back the cash, 8,000. I also have positions in the silver ETFs. I have in-the-money covered calls. You can see the quantity 0 here. It means that I'm having working orders for these positions, but they are not filled yet. Let's go back to my VIX short positions. VIX is the volatility index, and I short the Nikkei calls. SPY, I have bought so many SPY puts. The SPY puts are to hedge the VIX calls, because when VIX goes up very high, I will lose money in the VIX naked calls To hedge this position, I have to buy some SPY puts. When SPY, the SP500 ETF, goes down, VIX goes up. If VIX goes up, I will lose a huge amount of money here, but because I'm holding SPY puts, I will gain some money from the SPY puts. This is the analysis tool of VIX. You can put a symbol here. The horizontal axis is the price of VIX. The vertical axis is the profit or loss. You can see that if VIX goes up to 80, I will have a loss about 148,000. Let's check SPY here. If VIX goes up to 80, SPY will probably go down by 30%. The current price is 390. 35% down is 250 here. The purple line, the first number, means that today, if SPY drops to 250, I will have a gain 120,000. The red line means that you can see the date here. The red number means that on that date, on March 20th, I will have a gain 90,000. The reason is that after 1 month, from February 20th to March 20th, the SPY puts will have a loss of time value. That's why I will have less gain in SPY puts. This risk profile analysis is very powerful. If you like this video, remember to click the like button and subscribe.